Hey, welcome to our channel, where we help you to start and grow your small business with practical tips and tricks. If you're new here, don't forget to subscribe and hit the bell icon to get notified of our latest videos. In today's video, we're going to talk about one of the most important topics for any small business owner: taxes. Yes, I know, taxes are boring and complicated, but they're also a huge expense that can eat up your profits. That's why you need to know how to save on taxes and keep more money in your pocket. So, in this video, we're going to share with you some of the best tax saving strategies for a small business that you can implement today. These strategies are simple, effective, and legal, so you don't have to worry about getting in trouble with the IRS. Ready? Let's get started. The first strategy is to deduct your business expenses from your income. Business expenses are any costs that are necessary and ordinary for running your business, such as rent, utilities, supplies, advertising, travel, etc. You can deduct these expenses from your gross income, which lowers your taxable income and your tax liability. To claim your business expenses, you need to keep track of them throughout the year and report them on your tax return. You can use a software program, an app, or a spreadsheet to record your expenses and categorize them by type. You also need to keep receipts, invoices, bank statements, and other documents that support your deductions. Some of the most common business expenses that you can deduct are: 1. Home office expenses. If you use part of your home exclusively and regularly for business purposes, you can deduct a portion of your mortgage interest, property taxes, utilities, insurance, repairs, and depreciation. You can use either the simplified method or the regular method to calculate your deduction. 2. Vehicle expenses. If you use your car or truck for business purposes, you can deduct either the actual expenses, such as gas, maintenance, insurance, etc., or the standard mileage rate, which is 56 cents per mile in 2021, for the miles you drive for business. You need to keep a log of your business mileage and the purpose of each trip. 3. Travel expenses. If you travel away from home for business purposes, you can deduct your transportation costs, such as airfare, train fare, taxi fare, etc., lodging costs, such as hotel fees, Airbnb fees, etc., and 50% of your meals and entertainment costs. You need to keep receipts and records of your travel dates, destinations, and business purposes. 4. Depreciation. If you buy equipment or property for your business that has a useful life of more than 1 year, such as computers, furniture, machinery, etc., you can deduct the cost of these items over time through depreciation. You can use either the straight line method or the accelerated method to calculate your depreciation deduction. 5. Retirement plan contributions. If you set up a retirement plan for yourself and/or your employees, such as a September IRA, a simple IRA, a 401k, etc., you can deduct the contributions you make to these plans from your income. 5. This not only lowers your tax bill but also helps you save for your future. The second strategy is to claim any tax credits that you are eligible for. Tax credits are different from tax deductions because they reduce your tax liability dollar for dollar, rather than reducing your taxable income. This means that they have a bigger impact on your bottom line. Some of the most common tax credits that you can claim as a small business owner are: 1. Small business health care tax credit. If you have fewer than 25 full-time equivalent employees and pay at least 50% of their health insurance premiums, you may qualify for this credit. The credit is worth up to 50% of the premiums you pay for your employees, or up to 35% if you are a tax-exempt organization. 2. Work opportunity tax credit. If you hire employees from certain targeted groups that face barriers to employment, such as veterans, ex-felons, disabled persons, etc., you may qualify for this credit. The credit is worth up to 40% of the first $6,000 of wages paid to each eligible employee in the first year of employment. Research and development tax credit. If you engage in activities that improve or create new products, processes, techniques, formulas, inventions, or software for your business, you may qualify for this credit. The credit is worth up to 20% of the excess of your qualified research expenses over a base amount. 4. Employer credit for paid family and medical leave. If you provide paid family and medical leave to your employees under a written policy that meets certain requirements, you may qualify for this credit. 4. The credit is worth up to 25% of the wages paid to each eligible employee while they are on leave. The third strategy is to choose your business structure wisely. Depending on how you choose to organize your business entity, you may pay different types of taxes and different tax rates. Some of the most common business structures are: 1. Sole proprietorship. This is the simplest and most common form of business structure. It means that you are the sole owner and operator of your business, and you report your business income and expenses on your personal tax return, Schedule C. You pay income tax and self-employment tax on your net profit. 2. Partnership. This is a form of business structure where two or more people share the ownership and operation of a business. You and your partners report your share of the business income and expenses on your personal tax return, Schedule K1. You pay income tax and self-employment tax on your net profit. If you are enjoying this video, please hit that subscribe button. This way, you help us to create more videos, like this one, and to reach people, like you. Thank you. Now back to the video. 3. Corporation. This is a form of business structure where your business is a separate legal entity from you and your shareholders. You report your business income and expenses on a separate tax return, Form 1120. You pay corporate income tax on your net profit. If you distribute dividends to your shareholders, they pay income tax on their dividends as well, double taxation. 4. S corporation. This is a form of business structure where your business is a separate legal entity from you and your shareholders, but you elect to be taxed as a pass-through entity. You report your business income and expenses on a separate tax return, Form 1120S, but you do not pay corporate income tax. Instead, you and your shareholders report your share of the business income and expenses on your personal tax return, Schedule K1. You pay income tax on your net profit, but not self-employment tax. 5. Limited liability company, LLC. This is a form of business structure that combines the flexibility of a partnership with the liability protection of a corporation. You can choose how to be taxed as an LLC, as a sole proprietorship, a partnership, a corporation, or an S corporation. Each business structure has its own advantages and disadvantages, depending on your goals, preferences, and circumstances. You should consult with a tax professional to determine which one is best for you. The fourth and final strategy is to plan ahead and seek professional advice. Tax laws are complex and constantly changing, so it is important to stay informed and prepared for any changes that may affect your business. You should also consult with a qualified tax professional who can help you with tax planning, filing, and compliance. Some of the benefits of hiring a tax professional are: 1. They can help you identify and maximize all the deductions and credits that you are entitled to. 2. They can help you choose the best business structure for your situation and advise you on any changes that may be beneficial. 3. They can help you avoid any mistakes or errors that may result in penalties or audits. 4. They can help you save time and money by handling all the paperwork and calculations for you. A tax professional can be a valuable asset for your small business, especially if you have complex or unique tax issues. You can find a reputable tax professional by asking for referrals from other small business owners, checking online reviews, or using online directories such as the IRS Directory of Federal Tax Return Preparers. So, there you have it. 4 simple but effective strategies to save on taxes and keep more money in your pocket as a small business owner. Remember to keep track of your expenses, claim your credits, choose your structure wisely, plan ahead, and seek professional advice. With these tips, you can make taxes less stressful and more manageable for your small business. I hope you found this video helpful and informative. If you did, please give it a thumbs up and share it with your friends. Remember to check out the links in the description and the comments sections for more information, tips and tricks, and other resources for your business taxation needs. And if you have any questions or comments, please leave them below. I'd love to hear from you.